All right, let's talk about Take-Two Interactive. You know them, they're the $40 billion giant behind Grand Theft Auto, and on the surface, they're an absolute juggernaut. But if you look at their financial statements, well, they tell a very, very different story. Let's get into it.
So this is the big question, right? How can a company that completely dominates the sales charts, that brings in billions and billions of dollars, actually be losing money? I mean, it sounds crazy, but the answer reveals this really fascinating, high-stakes strategy they're playing.
And I'm not just talking hypothetically. Look at this number. In just one quarter, Q3 of their 2026 fiscal year, Take-Two reported an official net loss of almost $93 million. That's real. A loss. So what on earth is actually going on here?
To figure this out, we have to piece together what I'm calling the Take-Two puzzle. And it's really a story about where they're pouring all their cash and the absolutely colossal bet that they are making on the future.
Okay, and this is where it gets really weird. While the company was technically losing money on paper, its actual sales, what the industry calls net bookings, were just exploding. They shot up 28% to $1.76 billion, which just shattered everybody's predictions. So cash is pouring in, but the company isn't profitable. That's the puzzle.
So the first piece of this puzzle is getting that Take-Two today is not the same company it was 5 years ago. It's now what you could call a two-engine company, and that has changed absolutely everything about how their business works.
This chart right here, it tells the whole story. Thanks to their huge acquisition of the mobile gaming company Zynga, mobile games now make up 51% of Take-Two's revenue. Think about that. They are no longer just a console and PC giant. You could argue they're now a mobile-first company.
And what's really crucial is how these two engines work together. You've got the traditional business, these huge AAA hits like GTA. That's a high-risk, high-reward game with these massive but pretty infrequent sales spikes. But now you have this new mobile engine, which gives them a steady, predictable, constant stream of cash from people spending small amounts all the time. It's the stable foundation that lets the company make these enormous bets.
And believe me, that mobile engine is an absolute beast. A single new game, Match Factory, pulled in an estimated $308 million almost immediately after it launched. This is the kind of consistent cash that keeps the lights on and then some while they work on their biggest projects ever.
In having that stable mobile engine, well, that's what allows for the other, much, much bigger piece of the puzzle. The monumental, industry-defining bet on the next Grand Theft Auto. And this right here, this is the timeline that has the entire entertainment world holding its breath. And look at the sequence. A huge marketing blitz starting in summer 2026, the global launch on November 19th, and then the thing that really makes the money long-term, the new GTA Online starts rolling out in early 2027.
If you want to grasp just how massive this is, just try to wrap your head around this number. The last game, Grand Theft Auto 5, has sold over 195 million copies. That's not a video game, that's a global cultural institution. And pretty much every single one of those players is a potential day-one buyer for the new one.
So, remember that loss we talked about at the beginning? This is why. The development cost for GTA 6 is estimated to be somewhere around $1 billion. That's not just one of the most expensive games ever made, it's one of the most expensive entertainment projects in human history. That huge R&D spending is what's driving the current on-paper losses.
But the flip side of that spending, the payoff, is expected to be just as historic. The game is projected to have a premium price tag, somewhere between $80 and $100. You multiply that by tens of millions of people on day one, you start to see why they're willing to spend so much up front. And the price of the game itself is just the beginning. I mean, as management themselves said, the original GTA Online has been a cash-generating machine for over a decade. The real prize isn't just selling the game, it's creating a new online world that can replicate that stellar success for another 10 years.
Okay, but this isn't a guaranteed slam dunk. Not at all. When the stakes are this high, the risks are just as massive. And the financial reports we looked at also pointed out some pretty significant red flags that investors are definitely watching.
First up, let's talk valuation. This chart compares the forward PE ratio, which is basically a way to see how expensive a stock is. And as you can see, Take-Two is trading at a multiple of almost 53. That's more than double its peer Nintendo. The market is paying an incredibly high premium for this stock.
So what does a crazy high valuation like that actually mean? Well, it means the market has already priced in a flawless, record-shattering launch for Grand Theft Auto 6. There is absolutely zero room for another delay, a buggy release, or even just a so-so reception. Any stumble could be catastrophic for the stock price.
And then there's this, another potential red flag, insider selling. As you can see from this table, in just the last 6 months, the company's top executives, we're talking the CEO, the president, and the CFO, have all sold off a significant chunk of their personal shares.
Now, hold on, we have to add some important context here. Most of these sales are done through pre-arranged plans, for tax reasons or just to diversify their own portfolios. That's totally normal. But what is worth noting is the volume. Over the last 6 months, insiders have made 37 sales and 0 purchases. It's a very one-sided trend that investors are, for sure, keeping an eye on.
All right, so after all of that, how do we put it all together? What's the final verdict from the equity analysis we've been pulling from?
The entire bull case really hinges on this one financial idea, asymmetric risk/reward. It's really just a fancy way of saying that even with all the risks we just talked about, the potential payoff from a successful GTA 6 launch is so colossally huge that it outweighs the potential losses if things go wrong. So here it is, the bull case, all laid out. 1. The Grand Theft Auto brand is so powerful it has an almost untouchable moat around it. 2. The game's launch will be totally transformational, causing their earnings to just explode. 3. The Zynga mobile business gives them that stable financial floor. And finally, number 4, new consoles, like the next Nintendo one, open up new opportunities to sell their older games all over again.
And that leaves us with the billion-dollar question, doesn't it? Take-Two has spent a fortune and years of their lives betting that GTA 6 will be the biggest entertainment launch we have ever seen. The question for all of us is, will they actually pull it off? Or is the hype just too massive to live up to? I guess we'll find out on November 19th. Thanks for tuning in.